Kembe Venkatramana Rao is asking that, is there a correlation between AUM return and returns? Yes, there is a different kind of correlation between AUM return. In case of course, the law is that when AUM goes up, when fund gets larger, the fund companies are supposed to charge lower expenses. So, assuming that two funds give you exactly the same kind of return or generate same kind of return from their portfolio, the larger fund will get you a higher return simply because they have to charge less. The expense ratio, assuming that there are two funds, one is a 5,000 crore fund and the other is a 20,000 crore fund. So the 5,000 crore fund generating 10% return will charge higher expense, and the 20,000 crore fund generating 10% return will generate lower return. We will charge lower expense, hence higher return. So that's one kind of correlation. The other is that, in case of debt funds, because of the competitive pressure, the larger a fund gets, more competitive it becomes, and sometimes it charges less. So I would say that, this is one expense relationship. The other is, the maneuverability, flexibility, and its ability to demonstrate, performance based on various, freedom of strategy. So think of a multi-cap fund. Most of the multi-cap funds came into trouble because of the regulatory move that every fund is supposed to invest 25% into small cap and mid cap as well. It was entirely driven by the fact that, most multi-cap funds, when they succeeded, they got so much money that it did not make sense for them to be investing in small caps. But if it remained a small fund, then it was possible for it to do whatever it wanted to. Because my sense is that a small fund will be deprived of many investment opportunity or stock opportunity, simply because it has turned big, and making a small investment in a compelling company also will not have a meaningful impact on their overall performance. So my belief is that a relatively smaller fund is more maneuverable, and we have seen that, some of the smaller funds which have existed in the past and have done exceedingly well, they did very well when they were small, and they turn out to be not so impressive when they turn big. So equity fund, bad is big. There is also a theory that, what is called winner's curse. When a fund does well, more people put money. When more people put money, it gets very difficult to replicate the strategy that it has followed in the past, or the kind of things that it has done in the past. The big becomes an impediment. So size becomes an impediment. So I would say that, there could be different thresholds. For example, my sense is that bigger than 2,000 crore small cap fund could be big. Bigger than 5,000 crore fund of a mid cap fund could be big. Bigger than 15,000 crore fund, a multi-cap fund could be very big, could be big as well. Index funds, bigger the better, because it does not require great effort. Larger fund, lower expenses, and it translates into superior returns for you, or expenses are lower. So work on your threshold, and this to my understanding is going to be one of the biggest problems, which is leading to disenchantment, or which is leading to disappointment of investors in mutual fund. Because this is one thing which is actually at odds. One is that fund companies make money when they manage more money, and you make more money when the fund is small and it does much better. Your 10 rupee becoming 50 is one thing, but a fund company also gets new investors put in to make it even bigger, and they make even more money. So this is going to be at loggerheads, these two goals, and this is going to be a serious problem.